What's going on, guys? Hope you're having an absolutely fantastic day. So today I want to talk about why Tesla stock will probably fall after earnings, right? So I don't usually make all this like short-term predictions or short-term calls, but sometimes they're so, to me, maybe they're so obvious that I think I have like a 80 or 90% probability of being right. So I just want to post this video for people to consider, right, if they're holding positions in Tesla. So you can look at the information, you can look at the facts and decide whether I'm talking rubbish or whether I'm talking something which you want to listen to, right? Of course, this is not financial advice. Be sure to do your own research before making any financial decisions. So, of course, in this business, you know that nobody can be 100% right. I'm just showing you some of my research and some of my opinion, right? I can be wrong as well. So, if you do enjoy me making videos like this, basically me sticking my neck out just so you can get the facts, be sure to smash up the like button, hit subscribe, and hit the bell button, right? So, the first factor I want to talk about regarding Tesla is that its stock price, right? You can see that its stock price ran up from around $45 to $1,200 at the peak, right? So let's just call it $40 and $1,200 at the peak, right? You can see that's a return of 30x within 2 years, right? And I can tell you that Tesla as a company didn't grow 30x within 2 years, right? So what happened is the price probably got ahead of the earnings, right? So I'm not saying Tesla should trade like a boomer stock or some normal stock, but definitely 30 times you got to be wary, right? Because maybe a company can grow 5 times, so you need another 6x multiple expansion to get to this kind of valuations, right? So let's take a look at Tesla stock over the past 1 week, right? So this Thursday was when the Netflix earnings report came out, and Netflix tanked basically 20% in 1 day, right? So at that point, I said Tesla may be the next one on the chopping block because of the high valuations and all. You can see from then we actually fell about 8%. So it actually makes me less confident to put this video out, right? Some people, when it falls a lot, they'll say, oh, I'm more confident or more bullish, right? But I'm the opposite, right? Because after it falls a lot, maybe it's less likely that my thesis will continue playing out, right? Because mean reversion and all that, right? But I still think it has room for downwards because the valuation is still very, very rich, right? So let's take a look, right? So today is the 26th of January. So I should have posted this video earlier, like made this video earlier, but you know, you get what you get, right? So today is the 26th of January. I'm going to post this in the morning, and maybe people have like 1 day to consider their course of action, right? So I want to take a look at the Nasdaq Composite, right? Because after in the past maybe 1 month or something, right, the Nasdaq has absolutely been sold off like crazy, right? So we can see that there's a lot of fear in the market right now, and a lot of like macroeconomic factors that basically will push high valued stocks like Tesla down, right? So let's take a look at auto loan rate forecast. This is very important because you can say that Tesla will become a software company or whatever it is, but at the current point and time, maybe for the next 5 years, they are just an auto company and they need financing, right? People need financing to buy Tesla cars, right? And don't get me wrong, I'm not bearish on like Tesla as a company, right? I'm very, very bullish on the company. I'm just bearish the valuation, right? So that's a big distinction to make, right? Some people will say, oh, Tesla is going to zero because Elon Musk is Dogecoin enthusiast or whatever it is. I'm not like that, right? I think Elon Musk is a genius. I think the company is great, but I think the valuation is just stretched, right? So auto loan rate forecast will gradually increase as supply chain issues persist, right? So basically, what that tells you is the credit will become more expensive. So basically, if it goes up by 1%, every $100 that you take out a loan, maybe you have to pay extra $1, right? And you can take a look at the auto loan stats over the past 5 years, right? It's just been trending down, right? So maybe, yeah, you can see that it's just trending down, right? So basically, people are less interested in taking auto loans, and this is very important, right? Because credit is very important for auto companies, right? So this is basically factor number 3, right? When we take a look at Ford stock, basically we can note that auto companies are cyclical, right? They can't just go up in a straight line like those growth stocks like Microsoft or Facebook, right? That's the difference between maybe Tesla and a stock like Microsoft, right? Microsoft, you will always need it every day, 24/7. But auto companies, when times are good, they get a lot of sales, and when times are bad, their sales gets hit, right? So you can see that from Ford stock, you can see that it's cyclical clearly, up, down. When there's bad times, it's down. When there's good times, it's up, right? So yeah, another point to be made, right? That's number 3. So let's move on to number 4, which is one that we've all been keeping our eyes on. It's the Federal Reserve. That's number 4, because raising interest rates will cause the credit to be more expensive. The same thing as auto loans getting raised, right? Because of supply crunches, right? So it depends how willing people are to pay those higher rates, right? And in general, some people may not be able to afford those higher rates, right? That's the difference, right? I'm honest, if you give everyone enough money to buy a Tesla, I'm sure they'll pick Tesla over any other car, right? But the thing is, you have to note that not everyone has that amount of money, and not everyone has that capability, right? Okay, maybe some people will still pick their boomer brands because they're loyal to those brands, right? But yeah, next we've got to talk about competition, right? Because everybody is talking about how Tesla is going to blow all the competition out of the water, which they have been doing. But that's only because they are first to market, right? They are the first one. They have the vision, and they are continuing to grow and grow. While these people are thinking it's still a fad, but now that they are all these other companies don't think it's a fad anymore, right? And they are actually investing a lot of money to basically get into this space, right? Especially GM and Ford, right? All these are basically supported by the US government, right? I don't know why the US government won't support Tesla, but they will support Ford and GM. But that's a rant, right? So you can see competition is really heating up for Tesla, and you can say that, oh, this doesn't affect Tesla because it's crazy or number one or whatever. But competition definitely affects everyone, right? Because lower prices, first of all, more competitive rates, and especially more choices, right? So in the past, if you look at something like Apple, you can say that Apple's business over time, right, it has been very, very good. But you realize that their market share went from like I think it was 50% at one point, and now it's like 12% or something like that, right? Even though the company can continue to grow, but the company cannot grow so fast anymore, right? If they have 50% of the smartphone market right now, I think Apple can be valued at a 10 trillion market cap or 8 trillion market cap, right? So yeah, that's some food for thought as well, right? So the last thing I want to talk about is what to do, right? So I'm not telling you the sky is falling, you should paper hand, you should sell or whatever it is, right? But you need to make this decision yourself based on where is your location, how are the laws, right? Because first of all, if you're in a country with no capital gains tax, it's a feasible option to sell, wait for earnings, and maybe wait a few days and see what the market does, right? But if you're in a company with capital gains tax, that's probably not a feasible option, right? Especially if you bought at like $100, now it's $900, you need to pay like insane amount of tax, right? It's basically equating to the Tesla stock losing like 30 or 40% of its value straight away, right? So that's not really an option. But what is an option is actually options, right? So bit of a pun there, but you can always sell covered calls. So in case, because we have a bearish outlook, in case that the stock falls down, you sell covered calls. Basically what will happen is when the stock goes down, the covered calls will basically, the premium you collect will basically help you buffer the loss a bit, or you can buy puts, right? If you buy puts, maybe you buy a 1 week put just to hedge against this. Maybe you have to pay, I don't know how many percent premium it is, but if you have to pay like 2 or 3% premium, I think it's quite a worth it trade to make. I'm not even sure if it's that much, but yeah, weekly put would be another trade idea, right? But basically, I just want to say that I'm not invested in Tesla, so I'm not like, I don't have any vested interest, or maybe I don't have a bias, right? I think that is also something very important, right? Because sometimes it takes someone from the outside looking in to see it objectively, right? So yeah, that's about all I wanted to share today. If you did enjoy the video, do smash up the thumbs up button, hit subscribe, and hit the bell button. If you enjoyed this video, you probably enjoyed some of the other videos on this end screen. With that being said, have a fantastic day ahead and peace out.